Hi and welcome. This is Alpesh Patel, and let's kick off with rule number one, which I called the three M's. Now we're going to kick off with something fairly gentle to begin with. I'll explain in a second what the three M's are for those who want to be successful traders and investors. But to get to what the three M's are, we first need to have some understanding of the kinds of questions which all investors and traders need answered. There are those questions which center around entry. That's when you should be getting into a trade. So which are the best methods for deciding whether to buy or sell? And that's part of what we're going to have a summary look at in this CD. How much money should you put into each trade? How do you decide out of the total proportion of cash you have, how much should go into any single trade? Is it based upon the volatility of the stock, upon the stop losses, upon the rewards you expect? What's a quick way of deciding how much money should go in, and what do the professionals do on that issue? Should you worry about not calling the top or the bottom of a price? Many private investors, they worry that they didn't get in right at the bottom. Is it too late? It's rallied so much. Is it too late to get in now? Has most of it already been factored in? And that's, again, one of the entry questions which we're going to have to seek to answer when we look at the three M's. I seem to be getting in just too late. What should I do? Help me find some of the longer term trends. Again, with exits, just so you can understand, before I give you the answers, so you can understand the questions that we should be asking. As soon as I exit, the price goes up. What should I do? I seem to be getting out just as everybody else seems to be getting in. What is the probability cone? How does it show me where the prices are likely to be, say, in 3 months' time? But they're not just the only questions which, of course, as private investors, we want the answers to. We also want to know when it comes to losses. If I put my stop losses further out, I seem to lose money. If I put them in a bit closer, I get stopped out. What's the answer? Where do I put them? How do I decide where the right place is? Again, what do the professionals do? Oh, so close. My stop losses get hit, so I exit, then the market turns against me. In other words, it drops, I get out as I should do, and then it turns around all of a sudden. As soon as I place a trade, why does it move against me? I have some great picks, some great ideas, but I seem to have too many bad ones alongside them. How do I sift the good from the bad? I only seem to be chasing the market, never seem to be in front of it. And what about putting it all together? All these questions which relate to having a holistic approach to trading and investing. How can I profit from sideways markets, for instance? How many stocks should be in a portfolio? How can I trade the lucrative swing trade or the 1 to 3 week holding period with a day job? Because I can't be monitoring the market, say, all the time. Which products offer the best return? Spread bets, CFDs, Forex futures, options, and commodities. Or for that matter, shares, of course. How do you create a trading system? Can you show me ones that work as well as your own one, which will suit my personality? You might be impatient, or you might be looking at a long-term perspective. Which systems seem to work on those? How did that smart aleck Alpesh Patel win the stock picking competitions on Channel 4 Bloomberg FT? Now, some of these are questions which private investors ask me. Some of these are questions which any professional investor would want their private investor trainees, tutees to know the answers to. Okay, well, that's enough of questions. Of course we've got questions. What are the answers? What is rule number one? What are the three M's? Well, let me introduce you to them. The three M's stand for, first of all, money management, which I'm calling just one M. And those are the rules which answer some of the questions which we heard before about how much money to put into a particular trade and so forth. The second M is about method. How do we know when to get in? How do we know when to get out? That's trading systems, for instance. That's the second M. The third M is mind, or trading psychology. Now, these are, I always feel I'm chasing the markets. It seems the market's out to get me. I seem to be getting out too soon. I'm too scared to hold on to profits and so forth. Now, this first investment rule that I've given you is very, very basic, and it's very, very overall. It's not a detailed one. The remaining rules are very detailed. What I want to do with this first one is give you a perspective, a structure into which everything else will fall. When we have these three M's, then at the center of them, when we get it right, we get profit, so we know where we're going. Everything else to do with this CD relates to these three M's. Sometimes I'm going to be talking about trading methods, at others I'm going to be talking about money management, at other times I'm going to be talking about trading psychology. What's important with all of this at all times is that you know why we're talking about these particular rules. So you've got a big picture understanding. And it's for that reason that as rule number one, I've set aside the three M's. I know it's very overview. It doesn't give you something specific. The specifics will come as we work our way through. But this is just so you know every single rule relates to one of these three things.